companies you think solid, prospects, and even decades. You try more of the short-term bucks.
More patient?
Yeah, generally seen as less.
Welcome to the deep dive. You're probably here because you're thinking about, well, how to actually grow your investments, maybe significantly and maybe kind of quickly. Today, we're zeroing in on the potential for some, let's say, serious upward movement. We're aiming for those elusive X returns, specifically looking towards May 2025.
Right.
And we're looking across stocks, Bitcoin, and yeah, those often talked about penny stocks.
That's the plan. And we know you want a solid understanding without getting totally bogged down, right?
Exactly.
So we've been digging through quite a bit of material, looking at the basics, how these things actually work, but also some, the buzz around rapid growth.
Okay.
Our mission here is really to pull out the essential info you need so you can hopefully navigate these different investment paths a bit better.
Okay, let's unpack this then. We've got some good stuff here explaining Bitcoin, the whole world of traditional stocks, and yeah, the sometimes wild ride of penny stocks. So let's kick things off with Bitcoin. In simple terms, what exactly is Bitcoin?
Okay, essentially Bitcoin is a digital currency. The key thing is it operates without a central authority, like a bank. It's decentralized.
Meaning no single person or group controls it.
Exactly, no single entity. It popped up back in 2009, created by someone, or maybe a group, called Satoshi Nakamoto.
Right, the mystery name.
Yeah. The idea was to let people send and receive value directly, peer-to-peer, online, without needing bank middlemen.
Okay. And what's the driving force behind creating something like that? What problem was it trying to solve?
Well, a big part of it really was a lack of trust in the traditional financial system, especially after the crisis.
Oh, okay, that makes sense.
We're looking for alternatively offering maybe more financial freedom, less central control. And there's that built-in scarcity.
The limited supply.
Right. Only 21 million Bitcoins will ever exist, period. That limited supply is a really key feature. Well, it can act as a hedge against inflation. Unlike regular currencies governments can print more of, this fixed limit, it has these game theory things going on, potentially making it deflationary long term. Very different from our usual money.
That limited supply idea is definitely interesting. So functionally, how does Bitcoin work? We hear about blockchain wallets.
Okay, so Bitcoin runs on this tech called blockchain. You can basically picture it as a public digital record book, like a huge shared spreadsheet. Say,
okay.
Every single Bitcoin transaction gets recorded as a block on this chain. And these blocks are linked together chronologically using cryptography.
Which makes it secure.
Very secure and transparent. It's super hard to tamper with that history. Now, to actually use Bitcoin, you need a digital wallet.
Like an app or hardware.
Both, yeah. It's software or sometimes hardware that lets you store, send, and receive your Bitcoin. These wallets use private keys. Think of them like secret digital passwords that prove you own your coins.
Crucial to keep safe, I imagine.
Absolutely critical. And then there are public keys or addresses, which are more like your email address. That's what you give someone so they can send Bitcoin to you.
Okay, so it's digital, decentralized, uses this public. How do people actually get their hands on some Bitcoin?
Right. The most common way is just buying it on cryptocurrency exchanges. Platforms like Coinbase, Binance, or even apps like Cash App are getting into it.
So you just buy it like you'd buy a stock, sort of?
Pretty much, yeah.
Yeah.
You can also earn Bitcoin. Maybe you sell something online and accept Bitcoin as payment.
Okay.
And then there's mining. That's the more complex route.
Yeah, I've heard about mining. Sounds intense.
It is. It involves really powerful computers solving complex math puzzles. They do this to verify transactions and add new blocks to that blockchain we talked about.
So they're like the bookkeepers, almost?
Kinda, yeah. It's like this global competition keeping the network secure and running. And the miners who succeed, they get rewarded with brand new Bitcoins.
Ah, so that's where new Bitcoins come from.
Exactly. And just as a note, after the 2024 halving event, the reward for mining a block is now 3.125 BTC. It gets cut in half periodically.
Okay, mining sounds pretty involved for the average person. So what gives Bitcoin its value? What's the core appeal?
It really comes down to a few things we've touched on. That scarcity, the 21 million cap, that's a big one.
Right.
Then there's the trustless and decentralized nature. You don't need to trust a bank or government for it to work.
Okay.
Its global accessibility is another point. You can send it across borders pretty easily, often without the usual fees and delays.
Interesting.
And a lot of people see it as digital gold,
Hmm.
like a way to store value, maybe preserve purchasing power over time, and of course, simple more people, and even some institutions getting interested, that pushes price too.
But like any investment, there have to be downsides, right? What are the main risks or criticisms people bring up?
Oh, definitely. A major one is volatility. The price can swing, well, wildly sometimes in short periods.
Yeah, we've all seen those charts.
Exactly. The crypto space, unfortunately, is also attractive to scammers.
Oh.
So you have to be really careful. Watch out for promises of guaranteed high returns. Big red flag.
Okay, caution is key.
Absolutely. Then there's regulatory uncertainty. Governments are still figuring out how to handle crypto, and new rules could definitely impact its use and value.
And privacy, is it anonymous?
It's more pseudonymous, actually. Transactions are public on the blockchain, linked to those public addresses, not necessarily your real name.
Yeah.
But there are still privacy concerns and potential for misuse.
Makes sense. How about legally? Can you actually own and use Bitcoin?
Yeah, in most places like the US, it's perfectly legal to own and trade Bitcoin.
But it's not like official money, right? You can't pay taxes with it.
Generally, no, it's not considered legal tender in the US, for example. You can't usually pay your taxes directly with it. There are exceptions, though. El Salvador actually made Bitcoin an official currency.
Wow, okay. El Salvador. So if it's not quite mainstream money yet, where can you actually spend Bitcoin?
The number of places growing, actually. Lots of online retailers use payment processors, something like BetPay, to accept it.
Okay.
Some travel sites do, like Cheap Air or Travala. And you might find some local shops, restaurants, maybe even Bitcoin ATMs popping up that let you use it.
And the big debate. Bitcoin really future of money? Or is it something else?
Yeah, that's the $1 million or maybe $1 billion question, right? Supporters really see it empowering people, especially where financial systems aren't stable. They see it as a shield against inflation.
A revolution almost.
Some definitely see it that way, yeah, like the early internet. But skeptics, they point to the volatility we mentioned, the energy use for mining, which is significant, and the risk of governments cracking down more heavily. Those are big hurdles.
So for someone listening who's intrigued, maybe wants to dip their toe in, what's the best way to get started?
First step is setting up a digital wallet. Lots of options, software like Exodus, hardware wallets like Ledger for more security, or even just using the wallet provided by an exchange like Coinbase when you start.
Okay, get a wallet. Then what?
Then, probably buy just a small amount. Seriously, maybe $20, $50, $100. Just enough to get a feel for how it works without taking a huge risk.
Learn by doing.
Exactly. Practice sending and receiving. Maybe send a tiny bit to a friend who has a wallet. Even between two wallets, you can, I'll say it again, keep those private keys safe. Don't share them, ever.
Got it. Secure those keys. Okay, that's a great rundown of Bitcoin basics. Now, the big question for today's deep dive. Can Bitcoin itself realistically hit that 10x return mark by May 2025?
Okay, so based on where Bitcoin is trading now, roughly a 10x jump by May 2025. That would mean a price of around $600,000, maybe more.
Wow, that's a huge leap.
It is. And while crypto markets are famously unpredictable and move like that fast, it's generally considered, well, unlikely for Bitcoin itself.
Okay, so probably not Bitcoin directly.
Probably not that quickly. However, the sources do mention some alternatives, altcoins, that might have higher potential for those kinds of gains, though the risk is much, much higher too.
Altcoins? Like,
Yeah, they point to examples like Kaspa. It's known for a super fast blockchain, trading under 15 cents right now. Render is another one. It's in that AI and GPU rendering space. Seems to be getting more adoption.
AI related. Interesting.
Then there's Arweave, focused on permanent data storage for Web3, still pretty early stage. And even something called Bitcoin Ordinals that's newer, basically bringing NFTs, unique digital items onto the Bitcoin blockchain.
NFTs on Bitcoin. Okay.
Yeah, it's kind of a niche thing, but growing. So these are the more speculative corners of crypto where theoretically you could see huge percentage jumps, maybe aiming for those higher multiples. But again, the risk is way, way higher than Bitcoin itself.
Right, much higher risk, much higher potential reward maybe. Okay, interesting. So while Bitcoin might be a longer game for 10x, these altcoins are where the more extreme speculation is happening. Let's pivot now to something maybe more familiar for many listeners. Stocks. What is a stock?
Yeah, but a stock just represents a share of ownership in a company that's publicly traded.
So if I buy, say, 1 share of Apple.
You become a shareholder, yeah. A part owner, usually a very, very small part owner, but an owner nonetheless. If Apple does well and its value goes up, the value of your share, your ownership stake, typically goes up too.
And why do companies like Apple decide to sell off these little pieces of ownership? What's the benefit for them?
The main reason is to raise money, capital. Companies sell stock or shares to get funds for all sorts of things, expanding the business, building new factories, researching new products, hiring people, even paying off debt.
Okay, so cash.
Exactly. And in return for that cash, full future profits and growth with all those shareholders.
So as an investor holding these shares, how do you actually make money from them?
There are basically two main ways. The first is capital appreciation or capital gains.
Buy low, sell high.
That's the one. You buy a stock at, say, $100 a share, and later you sell it for $150. You've made a $50 capital gain per share.
Okay. And the second way?
Dividends. Some companies, especially more established, profitable ones, choose to distribute a portion of their earnings directly back to their shareholders.
Like a little bonus check?
Kind of, yeah. Usually paid out quarterly. It's a way to get income from owning the stock, not just hoping the price goes up.
Got it. So price going up or getting dividends, are there different kinds of stocks I might run into?
Yeah, there are a few common types. Common stock is what most people own.
Oh.
It usually gives you voting rights in company decisions and the potential for dividends.
Okay.
Then there's preferred stock, usually no voting rights, but preferred shareholders typically have a higher claim on the company's assets and dividends than common shareholders. If things go bad, they get paid first.
Oh, okay. Safer, maybe.
In some ways, yeah. Then you can categorize by company type. Growth stocks, these are companies expected to grow faster than the overall market. Think, Tesla or Amazon and their high growth phases.
Right. Exciting, but maybe riskier.
Can be. The value stocks, more established companies that seem to be trading for less than they're maybe fundamentally worth. Coca-Cola is often used as an example.
Looking for a bargain.
Sort of. And finally, dividend stocks. These are from companies, often stable ones, known for consistently paying out dividends. Good for income investors. Think AT&T, Verizon, or even some real estate companies called REITs, like Realty Income.
Okay, lots of different flavors. So where do I actually go to buy these stocks? I can't just walk into a store, right?
Right. You need a brokerage firm. They act as the middleman, connecting buyers and sellers on the stock.
Like online brokers.
Exactly. There are tons of online brokerages now. Robinhood, Fidelity, TD Ameritrade, Charles Schwab, Webull, E-Trade, SoFi. Lots of choices.
And it's easy to open an account?
Generally, yeah, it's mostly online. And many let you start investing with pretty small amounts, maybe just $5 or $100 to get started with fractional shares sometimes.
Okay. And what makes stock prices go up and down all the time? It seems so volatile sometimes.
Yeah, a whole bunch of things move prices. Company news is big, especially their quarterly earnings reports. Did they make money? How much?
Makes sense.
Broader economic news matters too, like what are interest rates doing? What about inflation? That affects the whole market mood.
Yeah.
Industry trends play a role. Right now, anything related to AI is getting a lot of attention, right?
Generally.
Big world events matter too. Geopolitical stuff, pandemics, elections, they can shake things up. But ultimately, it just boils down to supply and demand.
More buyers than sellers, price goes up.
You got it. More people want to buy than sell, the price tends to rise. More selling pressure, the price tends to fall.
Yeah.
Simple as that, fundamentally.
What about the risks? Investing in stocks isn't guaranteed money, is it?
Oh, absolutely not. No guarantees at all. Stock prices can definitely go down.
Yeah.
Individual companies can mess up, face problems, even go bankrupt.
Meaning you could lose everything you invested in that one year.
Potentially, yes. If a company goes bust, your shares could become worthless, and the whole market can take a dive. Sometimes we see market crashes or corrections.
Scary stuff.
It can be, though historically the market as a whole has always recovered eventually over the long term. But yeah, investing without understanding the risks, the company, the market, that's dangerous.
We often hear about long-term versus short-term investing. What's the basic difference there?
Long-term investing is generally the buy and hold approach. You pick companies you think are solid, with good future prospects, and you hold on to those shares for years, maybe even decades. You try to ignore the short-term bumps.
More patient?
Yeah, generally seen as less risky. Short-term investing, or trading, is about trying to profit from quicker price moves, buying and selling over days, weeks, or months.
More active.
Much more active and definitely riskier. Take more knowledge, better timing, and you need to be okay with more volatility. Day trading, buying and selling within the same day is even more intense and super risky, especially for beginners.
Okay, probably not for most people starting out. Let's touch on the market itself. We hear NYSE, NASDAQ, yes, S&P 500. What are these?
Okay, the New York Stock Exchange, NYSE, and the NASDAQ are the two big stock exchanges in the U.S. Think of them as the market